Indeed, we have, as a team, have done very deep analysis in terms of China's accessing China overcapacity situation. And the way you look at it is actually very widely spread in many industries, from some of the newer growth sectors, as you just mentioned, solar, EV, lithium batteries, to a lot of the traditional sectors, such as cement or steel. So it's a very kind of a type of a recurring situation. Now, what has really changed, in the past 1 year is what we try to monitor is cyclical forces, either any changes there that would allow the industry to adjust its capacity, the pace of the capacity growth that really bring us to a closer point to the rebalance. But the disappointment has really been in the past 1 year, a lot of the cyclical adjustment has been disrupted by some of the reprieve. And a part of that is demand stimulation, and a part of that is there has been some of these measures in terms of anti-involution that has been taking place. Unfortunately, it really depends on how the approach is, whether you're addressing the output or you're addressing the capacity. And in most cases, they so far has been mostly a reprieve in a way that protect the industry's weaker producers and the counterproductive actually to the industry long-term consolidation. And obviously in the past 2 weeks, we've seen some sign of changes.
So as part of these changes, we've also heard the government being a little bit more vocal. Premier Li Qiang in a cabinet meeting yesterday talking about irrational competition in the EV sector. We also heard from He Lifeng speaking at the Supply Chain Expo talking about intensifying efforts to boost domestic consumption and stabilizing the economy and ensuring long-term growth. Are you encouraged that the government now is being a little bit more public, being more vocal about this?
Yeah, absolutely. I think this is certainly a progress, a positive development, I think, on this issue. But I think the key remains to be, are we going to see capacity work, or are we just going to see output work? I think the way it travels, I think in the past few weeks, it does look like I think in terms of the scope of this anti-involution, it could widen beyond what has been the historical practice, i.e. pricing control or guidance, output, kind of a quota, etc. They tend to be only available where they are beneficial or useful in terms of providing the floor of the pricing, and typically very difficult and challenging to support a sustained recovery, and only if we address capacity. I think the scope changes. Part of that, in my observation, related to how you're going to control the local government support to some of these capacity expansions. I think, as you mentioned, a unified national market, in a sense, put it in simply, it really can potentially improve the capital discipline for the industry. And then on the other side, I think we always are very watchful. I think it's very important to see capacity exit, and it's a very challenging path. And whether it's growth sector or traditional sector, given the level of excess capacity, we probably have to do some of that for most of these sectors. And again, I think the direction travel is positive, but let's keep our eyes on capacity or output.
Do you think the government's efforts towards boosting domestic demand will help to absorb capacity, or do we need to see something more prominent like consolidation?
Yeah, I think it's really the second. We have seen how demand actually been helping these industries in the past 12 months, as a matter of fact. The trading program has been very effective in terms of getting additional buyers in the EV market. We have seen a rush installation in solar sector, in renewables, and obviously for different reasons. But demand has not been bad at all. We have seen, a double-digit sort of a boost on these sectors' demand beyond its baseline of demand growth. So. But what you tend to see is in a good demand environment, it the weaker producer tends to get a little bit more reprieve than the top producer typically, and therefore they end up staying in the market instead of exiting. So the consolidation is really what we see how the industry can really reduce the aggregate level of oversupply and also can have improving supply structure and therefore pricing power over time. So it's really the supply work that can be more effective in really addressing the fundamental problem of these industries.
There's 7 significant global manufacturing industries, and you guys have said that in the past year, the state of overcapacity is largely unchanged in 5 of those 7 industries. Are you able to indicate which industries stand out and which industries would be more ripe for consolidation?
Yeah, well, I think among these 7 sectors, what we can actually see the sector continue to struggle, I think, with the consolidation, and some of them because just nature of the sector on its own, and then adding up a lot of the other problem surrounding it. So, for example, we still see solar and the steel sector as the most challenging kind of a part of the camp that actually we have to go through a long-term consolidation. Having said that, there still can be cyclical forces that bring the sector good time and a bad time. And nothing is totally impossible if we can actually improve industries' capacity discipline or capital discipline and allow capacity to exit. I mean, there are cases, period, in the past that steel industry, for example, could actually get good supply demand kind of rebalance and a very strong pricing power. And I think within these 7 sectors, the good guys tends to be the appliance sector, air conditioner sector. That's probably one of the really successful example of industry get consolidated over time, from over 400 producers 20, 30 years ago today to just a little bit of over 10, and strong pricing powers through the cycle. And then certainly is one of the things that we could look for some of the success story. Lithium batteries are kind of a similar in terms of a supply structure. What's really interesting somewhere in between the EV sector, and we thought it's probably now in the worst shape in terms of industry incremental fragmentation, competition, defined leaders. But this is a sector potentially we do think has I think some of the character that would allow it to consolidate over time.
If we can, as we continue to track President Trump's war on trade, we're seeing this realignment of the supply chain, its restructuring. Would this be helpful to China's overcapacity problem?
Yes, indeed. I mean, first of all, I think our team, by the way, has done a really good work in terms of tracking the export tracker, looking at how the supply chain kind of shifting itself. And the observation is, despite the fact we've seen some of the shift of activity from China to other places such as Southeast Asia, broadly speaking, the impact on the activity or on demand from the U.S.-China tariff escalation so far has been much less than feared. So, but having said that, clearly, if you look at some of the export sector, as China continues to gain stronger market share and in the context of lower prices, there's a lot of pushback resistance. But I still hold a view that the only time we can really address some of this export problem or the probably too rapid market share gain is really a rebalance of the domestic supply demand situation. And one example is if you look at China's steel sector, which is really now going through a lot of kind of challenges in the export market, not just the U.S.-China trade, but from many other countries. Looking back 10 years ago, the years that Chinese steel sector export the least steel is the time we get the domestic supply demand in place. So ultimately, we really have to come back to this very simple kind of an underlying driver that is a rebalancing of the domestic supply demand.